Good afternoon, everyone. Good afternoon. Today is Friday, July the 2nd, 2021. We're just coming to you with our real estate lunch talk, where we talk about different articles and trending topics within the real estate industry to keep you up to date on some of the things that are going on that we deem relevant. Obviously, we can't give you all of the news, but there are some topics here that we think will help you if you're a buyer, seller, or an investor. If you want to get in touch with me to talk about something specific, please give me a call at 973 475 8488. And then my email is acg at abundantcapitalgroup.com. So, with that being said, there's a couple of articles that I saw that I want to kind of get into. Just to let you know, on Monday, I'm gonna do a real estate industry update. I'm just kind of going through and gathering some information between now and Monday. I'm gonna make some notes, and then I'll do a video for our real estate lunch talk on Monday in regards to just the industry and the market itself. Give you the good news, and then give you some other things where there are some opportunities if you are an investor. So you can look forward to that on Monday, just about 12:30, 1 o'clock. I'll put that out on my social media platforms, either Facebook, YouTube, and Instagram. It'll be on there as well, so you can see it, and whenever you get a chance, take a look at it. Hopefully it doesn't go too long. There is, some information that I want to get out there. We usually try to keep it to 30 minutes or less on these lunchtime talks. So we'll try to do our best to keep it in there and make over a little bit, just depending on all of the information. So you can look forward to that on Monday. A lot of people who are working are off on Monday. So if you get a chance, check it out, look for it. And, hopefully that'll be some good information for you. So the first article here is called Housing Metrics Point to Worsening Affordability. This is from the mreport.com. So it says most Americans who hope to purchase a home in the coming months face a dilemma. Low inventory and other factors have led to the increased home prices and unaffordability. Thus, many house hunters wonder if things will improve or become more difficult for the buyer in approaching months and even years. So this is kind of something that we've been talking about for a while in terms of affordability is kind of the big issue within the real estate industry. You have a lot of people who are, purchasing homes over and above the asking price. I mean, I've seen, things go for over $100,000 more than the asking price, just depending on, where the property is and that particular borrower. So there's a lot of competition out there, and it's really driving up the prices. So affordability has become a big, big issue. Also, rents are starting to go up as well. Some people feel like if I'm going to be paying, this amount of rent, I want to own my own home. And then just the overall, a lot of people are, like to be renters and live in apartments, but you have a lot of people that say, if I have to pay this amount of money, I'm trying to get a house. But those are the types of people that are getting kind of priced out of the market, so to speak, from an affordability issue. So again, I would, if you are someone that's looking to buy, you may want to hold out a little while longer until the market shifts a little bit. That's part of what we'll talk about on Monday. Some of the statistics that are out right now through April when it comes to the forbearance plans and how that's going to affect the current market. And there may be some, more opportunities, as these forbearance plans come to an end for people to get homes that are more affordable. So that's just a little something for the buyers out there. I know that a lot of people who are thinking about buying are probably aware of that, but affordability is going to be a big issue. And even when this market changes, you still have a lot of people that are going to be chasing these homes, and hopefully there'll be that supply catches up with the demand, kind of so people aren't still having to outbid each other for properties. But that'll be something that we'll have to see. As an investor, because of this, what they call like a shadow inventory, all of these properties that have forbearance plans and things of that nature, they'll be coming to an end. And what we've been trying to do is get investors to think about buying the notes, the real estate notes on these properties. Fannie Mae just finished the first loan sale in June. There were two sales in June, and those sales will be complete in August, and then probably somewhere around October, November, that inventory is going to come down to smaller investors. There'll be an opportunity to buy some non-performing or possibly reperforming loans at that time. So we try to talk to people about getting into the real estate note industry because of what's going on now and what is soon to come. And affordability is going to be a big issue. And as a note investor, you can make the house affordable a lot of times. You can rework the numbers so you are making sure that you get a good return on your investment, as well as helping the customer or the borrower out with a payment that they can make and making it affordable. The reason why we're able to do that is because we do purchase notes at a discount. So we are purchasing them for less than what the value of the asset is itself. So when you do that, you have more flexibility of working with a homeowner and still making it a good investment for yourself. So, our platform here is really about that. If you go to the Abundant Capital Group YouTube channel, you'll find a number of different talks and number of different information videos and things of that nature in regards to the note industry. So if you go there, you'll see that stuff if you want to take a look at it. And like I said, being a note investor is going to be, it's going to be an opportunity to help people with the affordability issue and staying in the property. So, that article is in the chat, in the comments, I should say. If you want to take a look at it and just read through it, I'll just quote another little piece of it. It says, shifts in housing supply or demand can affect affordability. If supply increases and meets demand in the middle, housing prices will moderate. Unfortunately, while inventory has ticked up slightly in recent weeks, it remains near historic lows and is not enough to compensate for a decade of underbuilding and homeowners simply staying put. So you can read the rest of that article, and just like there's another article that I'm going to talk about, I'll probably go to that one next because this one mentions it, is that the inventory ticked up slightly. So we'll talk about how the inventory has ticked up slightly, but if you want to take a look at this, it's in the comment section. Affordability is a big issue, and for investors, there's a way to help out with the affordability issue. And for buyers, just be careful. I wouldn't overpay for a property personally. I've done it before and I wouldn't do it again, and I wouldn't instruct anybody else to do it. But to each their own. If you feel like that's the best thing for you to do, then so be it. But just be careful and make a good decision for yourself. So this other one here about the new home listings on the rise in June. And this will tie into what I'm going to talk about on Monday, the whole state of the industry. About 65% of all forbearance plans will be coming to an end within the 90 days. And I mean 90 days starting from June until about August. And I think you're starting to see the results of those plans ending because it doesn't specifically say in this article that because the forbearance plan ended, that people listed their home. I'm just kind of making an assumption that because, that first kind of wave of people coming off of the forbearance started in June. Obviously, it was extended through July, but I think some people have said, hey, we've kind of rode this thing out for, about about 18 months almost. Let's see if we can put this house on the market and get it sold. We may have some equity here. Or if we don't, at least we can break even and start start all over again, so to speak. So says according to findings in Realtor.com monthly housing report for June 2021, new listings show signs of a comeback as home prices broke a new record for the fifth consecutive month at $385,000, while the number of homes for sale remained drastically lower than normal with a 43.1% decline over last year. It marked a significant improvement over the previous months, which was 50.9% decline in May. So that's a 7% increase in homes being listed. So, and like I said, because of the forbearance plans ending, I think people have said, okay, we've held on long enough. Let's try to sell this thing and move on. And I think you're seeing those two things kind of come together, and hopefully, people will make that decision to put their house on the market and maybe take advantage of some equity if they still have any, because you have to understand too that while you're in forbearance, your equity actually is being eaten up because those payments that you have missed will be put on the back of the loan. So what you owe, you look at your statement and it may say $200,000 balance, but the actual balance could be $250,000 based on all of the payments that got put on the back. So if you're living in a neighborhood where you think there's $275,000, $300,000 neighborhood, and you think it maybe have $100,000 worth of equity, that's probably that won't most likely be the case if you were in a forbearance plan. Those back payments are put on, like I said, and that kind of eats into your equity. But because equity has jumped so significantly in the last couple of years, hopefully, it hasn't, eaten up all the equity or most of it. Maybe it's only taken, maybe 10, 20%, 50% at the most of your equity, and you're still able to walk away with something. Hopefully that is the case. But I think that you're seeing, like I said, those two things come together, and where we're getting more listings and those forbearance plans starting to end. And it's probably causing that. So that's kind of my opinion on that. And the article, again, is in the comment section. And then this last one here is the CFPB, which is the Consumer Financial Protection Bureau, shields at-risk homeowners from foreclosure moratoria expiration. The CFPB has finalized amendments to federal service and regulations to reinforce the ongoing economic recovery as the federal foreclosure moratorium are phased out. The amendments will also help protect mortgage borrowers from unwelcome surprises as they exit forbearance plans. So it says here, as the nation shifts from COVID-19 emergency to the economic recovery, we cannot be complacent about the dangers we still face. The CFPB acting director, Dave, I think it's Urejo, U-E-J-I-O, I don't know how to say that. An unchecked wave of foreclosures will drain billions of dollars in wealth from the Black and Hispanic communities hardest hit by the pandemic and still recovering from the impact of the Great Recession just a decade ago. An unchecked wave of foreclosures would also risk destabilizing the housing market for all consumers. We are giving homeowners the time and opportunity to make informed decisions about the best course of action for them and their families, whether it is seeking a loan modification or selling their home. And we are giving mortgage services the flexibility they need to serve homeowners with dignity while managing an unprecedented volume of borrowers seeking assistance. So again, if you go back to some of the things that I've talked about, I was telling people that even though that, saying to people, suggesting to people that if you are in a forbearance plan, you want to try to have some type of plan of what you're going to do once these moratoriums and, the bans are lifted. What is your plan to do? The fact that you haven't been making a payment, you have a place that you are going to go to, and you're thinking about getting an apartment, whatever the case may be. But you need to have, start to kind of think of that. Or you needed to do that a few months ago. And then now the CFPB is providing certain options for home buyers. From homeowners. One of them is giving borrowers a meaningful opportunity to produce loss mitigation options. So you can call and try to see if you can get back on track on paying. What options does your lender give you with your loan? That's one thing that you can do. Talk to your loss mitigation departments and see what they'll allow you to do. And that, again, will be depending on if you are working, or if you had to change professions, change jobs, and you're not maybe making as much money as you were before. I'm pretty sure that most of these lenders and servicing companies will work with you to kind of work something out. The second thing is allowing mortgage servicers to help borrowers faster. So they're going to streamline the process. It says under the new temporary rules, servicers can offer streamlined loan modifications to borrowers with COVID-19 related hardships without making borrowers submit all the paperwork for every possible option. These streamlined loan modifications cannot increase the borrower's payment and have other protections built into them. So, that kind of goes into the first one where you call your loss mitigation department and, it's probably be a 2 to 3 step process to kind of get things worked out for you. Maybe you want to start to do that. So they're going to make it, streamlined process. Explaining to borrowers their options. Servicers will be required to increase their outreach to borrowers before initiating foreclosures and tell borrowers key information about their repayment of their options, the repayment or other options when they communicate with borrowers who are exiting forbearance or struggling to make their loan payment. So if you are in this position, try to talk to your lender. Don't not pick up the phone. A lot of times, people get a little fearful. They know the situation and, they're thinking that the worst case scenario is going to be foreclosure. And trust me, I've been in that situation where I didn't want to talk to the lender, back when 2009 and 10, 11 happened. I didn't talk to the lender and I should have. I started to kind of talk to him and didn't follow through all the way for a lot of different reasons. But I should have had more conversations with my lender earlier on in the process and, would have probably been able to work out something that made sense. So take it from my experience, try to reach out to your bank or financial institution that has your loan and talk to them about things that you can do. I think that's the best thing to do. It'll help you make a good decision for yourself. And I think that a lot of these lenders will work with you to come up with solutions to your problem. So that article is in the comments as well. So it's been just about 20 minutes here. We don't try to go longer than 20 to 30 minutes usually. So like I said, we try to bring some relevant information for buyers, sellers, and investors. So hopefully something on here, spoke to you, made sense for you. If you have any comments, please put them in. And if you can, like and subscribe to the channel. And I think that's about it. Again, if you want to reach out to me, you can call me at 973-475-8488, or you can email me at acg@abundancecapitalgroup.com. With that being said, it is the Friday before July 4th. Everybody have a safe 4th. Hopefully, won't be too bad of weather, and maybe we can enjoy at least Sunday and Monday. But everybody be safe out there. Enjoy your families and friends, and I'll see you back on Monday. I'm going to go live tomorrow as well. We do a live at about 1 p.m. from 1 to 2. We're kind of going through real estate notes, that whole process. This is the 3rd week that I'm doing it. So we'll be picking up off of last week. Again, if you go to the channel, you'll see the first 2 episodes. And then this is the 3rd to kind of piggyback or just continue the series. We're taking you from beginning to end, when it comes to notes. So hopefully you'll have time to catch that live or the replay. But I'll be back Monday. I'll put out another video in the middle of the day, around 12:30, 1 o'clock, in regards to the market, the current market, and give some stats and things like that to talk about. Okay? All right, everybody. You have a good one. Talk to you soon.